morning, all. Ira Epstein of Linn Associates with your morning flash update. And I'm a little bit late. It's about 8:40 a.m. Central Time today, and this is Wednesday, September 8th. Now, before we get too far, today at 12:30 p.m. I have my live webinar. So in order to take advantage of that, you see this icon here, click it now. Fill out the form, come in, and if you have questions on specific spiders, ETFs, or stocks, write them to me. Futures, you can just ask me during the course of it. I'll cover just about everything you want there because I've got all my charts set up, as you can imagine, right here. I use two different charting services, and I don't bring them each up. I can't bring them each up at the same time for that. Today's also the last day of my special on my research. So if you watch at the end of this, I'll review that for you and show you how you can get that, but it ends today at midnight. So we've been under pressure a good part of the morning in the stock indices. We just got our first meaningful bounce in the Dow off the lows. That's all happened in the last 3 to 5 minutes. You can see that the gold market down. It's not recovering so far from yesterday. Silver down, losing a little bit to the gold. Copper, they pressed earlier. I was watching actually the lows for them, and then the bounce that has taken place. Dollar is staying strong. It is holding on to yesterday's gain, and we've had a big reversal of fortune in the energies. They have come roaring back to the upside. Yesterday, the market was concerned about the factor that Saudi Arabia had lowered the price of its selling oil price to the Asian markets and the strong dollar. The market's overcome that. Bonds and notes are very stable. Corn and beans got initially a bit of a bounce when they heard last night that in Louisiana, the ports have reopened so they can do the shipping out of them. When we look at the day's news, the MBA mortgage headline recap, if you look at it, every single number's in a decline. What have interest rates done over the past week? They've been rising. So that shuts off a certain amount of people that want to get it. Plus, you get some seasonal factors. People that are moving with families have done the move. The kids are back in school, so that's something to consider. In the Red Book retail sales, another strong gain. Again, people going back to the office slowly, but going back to the office. And of course, the kids need clothes. They're all back in school. So that's something. You haven't done that in 2 years, right? The conference board, this could be the number of the day. The Help Wanted Index. For whatever reason, the market's decided that this is something to pay strong attention to. I will. At 9 o'clock, that comes out. Last month's reading was a whopper at 145.7. Now, seeing a nice decline with that would probably prop up stocks. Get a number into the 150s, watch out. You could be dropping them hard again. The Federal Reserve Consumer Credit comes out today at 2 o'clock. They're looking for that to decline by about a third, so that's a neat thing. And API will come out today at 3:30 p.m. Why the delay? Well, it's pretty evident. What was yesterday? Labor Day, actually Monday, Labor Day holiday. So everything gets delayed by a day or so. As I said, one of the things that I like to do is couple of times a year, I offer specials on my research, and that's what this is. This time around, for any course, well, let's do it this way. For any of my research products that you buy a 1-year subscription to, and they begin at $156 for the year, you can get my free charting course at $249.95 value, or my enhanced Bollinger Band course, a $75 value. Thrown right in, you can give it away as a friend, you can take it yourself ideally and learn what we're talking about. But this ends today at midnight. It will not be extended, that's it. So how do you get to this? It's simple. Do you see this link up here? Click that one on, it'll take you right to the product. I'm Ira Epstein. I hope to see you at the live webinar today. Take care.